Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we're just about consolidating both for the Nifty and the Sensex, and that kind of underperformance or trend of underperformance continues for the mid-cap index, but it's off the day's low. So there's definitely been some amount of recovery which has taken place. But overall, in terms of cues to watch, we have a lot of earnings to reckon with today from some big financial majors. So Kotak Mahindra Bank, RBL Bank, which should be out soon enough, Bajaj Finance, Bajaj Finserv, both these stocks should be coming out with numbers today. And separately, in terms of other stocks in focus, it's Ashok Leyland, which has bounced back today, PVR, which has actually moved up to the high point of the day, recovering from losses, and Mindtree, which is down 8% despite what was a good set of numbers. Hi, Prashant.
Ekta, hi. And, you were talking about the recovery from the lows, and the graphic on your screen will tell you the recovery that has happened already. I mean, so the Nifty is 0.5% off the lows. The Bank Nifty is up 0.5% again from the lows. The mid-cap index is up 1.4% from the day's low. And the small-cap index is up 1.4% from the lows. So this is, I mean, actually no small recovery that we've seen. It's almost in the last 2 hours of trading that we've had, been completely different markets. So we might be flat right now, but the you're basically looking at 0.5% moves on large cap indices and nearly 1.5% moves on the broader market. So that's what we are working with, and there's still the rest of the day left to go. So this promises, in that sense, at least to be an interesting day. Will we build on the recovery, or will the day lows again come back into play at some point in time? Sudarshan Sukhani is well poised to answer that question. So let me bring him in and put that question to him straight away. Sudarshan, what do you make of it so far? It's been a pretty wild ride.
Yeah, good morning. Well, it's a good time to be in the Nifty as a long trader. In the morning, we were at the lows of a trading range and there was no trade as the market slid down. But the lows have held. So my suggestion is you go long in the Nifty for the day. And if it closes strong, you can actually carry this position tomorrow. So yes, you're right, there is a recovery. That recovery is tradable and we would like to be long now.
Okay. What would your stocks be, Sudarshan? Morning?
Well, good morning. Bajaj Auto is a buying opportunity. Bajaj Auto and Maruti are both giving a sense of a breakout on the upside. So consider buying Bajaj Auto. Dabur from the FMCG pack has the same pattern, a big rally, a consolidation and a resumption of that rally. That's a buying opportunity. One short sell is Z. Z has disappointed for some reason or the other, and the markets are pushing the prices down. It's an intraday short, but it's there. So 2 buys and 1 short.
Okay, we've got some questions coming your way, Sudarshan. Govardhan Sai wants to know if Ashok Leyland is a good buy at current levels. I mean, again, a big dip and then got bought into today.
Well, it's been bought into. If you are a short-term trader for a couple of days or weeks, then you can buy at current levels and then put a stop loss. But I don't think that's the question. If you are an investor, wait patiently. The next 2-3 months will see some kind of correction in the short markets, and that will be the time to buy. You can probably get it then between 95 to 100. So be a little patient.
Okay, we have one more. Manoj Jacob has a query on Prakash Industries. He's bought the stock at 240, has 10,500 shares and can hold it for the next 5 years. Wants to know what to do.
Well, there's little option now. I mean, the stock has halved. So there is no sense in selling it up. Now you be a long-term 5-year investor. It should find support somewhere around lower levels, maybe 105 or 110, somewhere around that. And you have the patience, so be patient. It will recover. I don't know when, but it will.
But no averaging, right?
I'm sorry?
No averaging or buying at lower levels.
Oh, no averaging, because he's already deep out, sort of in the, no averaging. Averaging is never a good idea, unless you are buying blue chips like Reliance. That's different.
Okay. All right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and talking to us. So those are some technical calls coming in for the Nifty, just about closing in on 11,000 as we speak. Let's get in some more strategies. Say Rudramurthy of Vachna Investments is with us. Rudramurthy, over to you. Stocks as well as index call.
See, first of all, a word on index. I'm feeling a lot of weakness to come in, even though this recovery is there in market. This is just a short covering because morning many of them went short at the lower levels and they might be caught. But I don't consider this as a big recovery because this recovery is just led by PSU banks and few non-performers. If I see stocks like, let us say, HDFC Bank, look at Bajaj Finance, all these great performers are definitely not going strong today. So I won't recommend this as a good recovery. In fact, I'll be getting out of all my long positions today based on yesterday's later half movement, what happened in the market. So I am not positive on market. This is definitely time to profit book. Now, when it comes to stock specific call, NIIT technology for me looks very, very weak. In fact, this stock can continue the way Mindtree went down, and I am not comfortable because a lot of profit booking is seen in this stock. NIIT tech can be sold at current levels. Keep a stop loss of 1,125 and have a stop loss of 1,125 for a target of 1,055. And I have a second sell call on Chola Finance in futures. Again, this stock specific is seeing a lot of weakness at current level. One can sell Chola Finance in futures for a target of 1,465 with a stop loss of 1,505. And I have a last sell call. This can be on HDFC Bank because I'm seeing weakness at current level. Have a tight stop loss of day's high, which is at 2,187 in futures, and have a target of 2,160 on HDFC Bank. And this is definitely time to get out of all long positions.
All right, Rudramurthy, thank you very much. Appreciate you joining in and good getting that perspective from you, those trades coming in from Rudramurthy. Tata Motors at the bottom of your screen is jumping up about 2% plus. By the way, the recovery is building on, I must say. So the Bank Nifty now is, when we began the show, it was about 0.5% from the lows. It's about 0.9% from the lows in the last, 7 or 8 minutes or so from the time that I pointed this out in the first place. So keep an eye. I think same is the case with the Bank Nifty as well. Let me just quickly look at the Bank Nifty, 17,965. So it's right there. I mean, 1.3, 1.4% off the lows. We take a very quick break here. But here's some opinion. We are still in a bull market, says Atul Suri. And he also spoke about the fall in midcaps that we've seen. He believes the V-shaped recovery is unlikely for that part of the market. Listen.
I won't use the term bear market. I think we are in a bull market. And what we are seeing is a rotation. What we are seeing is certain excesses that had happened in the year post-demonetization, let's say in a year and a half before that. I think they are getting corrected. So what you're seeing is you're seeing a rotation within the mid-cap, large-cap kind of play. And you're also seeing a sectorial rotation. We may see almost a 10% move in the Nifty in the next, by the end of the year. I don't think you're going to see a V-shaped recovery. The crucial point is going to be the emotional level. The pain of seeing your stocks down, and a lot of people are down 10, 20, 30%. And to be able to eliminate that and get into winners. So at the moment, most people are frozen, most people are wondering. Even if they have got profits, they don't know whether to eliminate. So at the moment, there is a very big gloomy mindset that is there in people. I don't think that's the right approach to have. It's important to be clear and see where the churn is happening. In the short run, we will not keep tanking at this pace. It has to stabilize. The crucial thing, Rima, is going to be that will you see that kind of bounce back? See, people have felt the pain. People are holding on. Now, the question is that will my stocks bounce back?
You know, we should put up RBL Bank, the stock. The numbers should be out anytime now. And last quarter was an absolutely rock star of a quarter. I mean, you know, incredible numbers. The stock is up basically, 10% or so from that 500 odd levels that it spent almost a year. So it's not as if it's done, you know, a great deal. Let's see if these numbers that come out today are able to push it up. The market as such for financials hasn't been looking all that great, but great numbers can do the trick probably. Okay, we will talk about banks and RBL more when the results are out, but let's talk about commodities. And we're talking about sugar. In a bid to ease the stress on sugarcane farmers, the government has increased the guaranteed price at which sugar mills will procure sugarcane that has gone up by 20 rupees. It's from 255, it's gone up to 275 rupees per quintal. Manisha is here to tell us what it means for the sector. Stocks, mind you, stocks like Balrampur, etc., are selling off. Manisha.
Oh, well, yes, it's not a good news for the industry. So everything from sugar prices to the sugar stocks haven't taken it quite well. You know, we are looking at a record high production for the season gone by and for the next season as well at around 35 million tons. The inventory is rising. There are no exports materializing. And the low returns to industry has been, of course, a big ban. And, of course, after that, the FRP hike is something that yet again puts some pressure onto the industry. Vivek Saraogi of Balrampur Chini is now with us on the phone line. Mr. Saraogi, hi, thank you so much for joining us. First of all, what is the sense that you make of these numbers? And two, are the mills really in a position to pay a FRP hike?
Hi, Manisha. See, let me give you perspective from a UP angle, which is more relevant to UP and my company, our company. So this is a non-event as far as UP goes. Our SAP is already above that level. So this FRP hike is a non-event and not at all negative in my mind for UP millers, because it's raising the cost for the others who are on FRP. So the government is more duty bound to increase the sugar price or come to the rescue of the sector. The hints of which we've already seen that they've begun doing.
Is there any...
They did...
Yeah.
Sorry, come.
Yeah,
you
sure.
complete.
Mr. Saraogi, every time we see an FRP rise, it is followed by an SAP as well. Are you saying that this time around we perhaps wouldn't see that happening?
I see, this is my view and I reserve the right to be wrong. I see a 0% chance. In fact, if the state does not come up with a program which is giving subsidy for the payment of cane price, I don't think millers will be in a position to start. So just the reverse is true.
And what are the, while of course, how many times in the past have we really seen SAP not being increased? I mean, of course, it has been done a couple of years in a row, but at a time of election, at a time when the farmers perhaps are, the more encouragement is being given to that sector really, what are the chances really that the state wouldn't move on this?
2014 election, the price was not raised, rather subsidy came in.
All right.
So it's not an election event. People have seen that if you raise cane price, you still can lose the election. It's rather the cane payment. So I'm very clear in my mind, and I always say I can be wrong, but A, there has to be a subsidy to pay the cane price. B, this FRP rise means the cost of other states gets more aligned and closer to UP.
Okay.
The government would be under extreme, I would say, caution in their mind as to how the cane price needs to be paid. So the measures like minimum price, which we've seen, which is way below the cost, which we've responded to the government.
Yes.
I see a lot of improvement possible in that front.
So even if those prices are reviewed at 33 to 35 rupees per kg of a cost of production, where we stand at 29, how much is the sense that the government would be willing to extend these prices on the higher side? And number two, what are the kind of export numbers that you're working with right now? Because out of the 20 lakh tons, we do understand almost just about 3 to 5 lakh tons is what we've exported until now. What is the number that you will need to export in the next year to ensure that your storage cost to begin with doesn't really rise from here on?
Okay, let me break this up into two parts. That is the 20 lakh announcement for the current year. I'll deal with that. There were some negative clauses in that export announcement, which took a couple of months to get cleared, the 2C if you know.
Right.
So once that got cleared, I think the momentum has begun. And our request to the government is, since 2 months there was a blackout period, to extend the period for this 20 lakhs from 30th September to maybe October or November, let's say.
Okay.
So I do see that happening. Plus, in our dialogue and in our request, we've also clarified that at least 18 to 20% of next year's production needs to be compulsorily exported again. So I think that discussion with the rise in minimum price, all that, a composite policy for the next year would be coming very soon. Very soon means I'm not saying tomorrow, but all that has to factor in this rise, the ability to start, the bankers' ability to fund, and the millers to pay. So to get everybody aligned, things cannot remain where they are.
So just on the costing front right now, really, what domestic price would work for the mills and what kind of losses? I mean, we do understand that the export price is at 22 or 23 rupees kg, which is way below your cost of production. So what pricing would you need to see in the domestic markets and for exports as well?
See, we've requested for, to be able to handle the export loss on our own, and export should be made compulsory. A minimum price of 35 is what UP requires.
And what kind of demand really are we looking at, and what kind of payables is the industry standing at? Because we do understand on 1st of July, the cane arrears stand at 18,000 crores, which of course could be going higher from where we stand right now. In the next year, with this FRP, with your ability to pay the mills, what is your sense on both those numbers?
See, if with the measures I've said, and these are non-cash measures for the government, nothing goes out of their pocket. So if measures are done properly and in good time, I see things playing out much better, which means my price moves up. I get freedom to sell because after minimum price we've advocated, you cannot throttle by releasing less. You have to let the market flow. So we have 3 recommendations and requests. One is minimum price up to 35 to make our exports compulsory on a certain level of 18 to 20% next year's production, and to do away with releases, so that there is free flow in the market. So with these measures happening, and if one takes a practical view and does this, I don't see a problem.
All right, Mr. Saraogi, we'll let you go at that. Those are some positive cues really coming in from Balrampur Chini, that what really has been done until now, of course, isn't so well. But one thing that he's really hinging on is that UP will not move on SAP. So I think that would be a big positive if that happens, because the UP is already paying higher prices than the current FRP that we've seen being changed yesterday.
But that is his view at this stage, right? I mean, that is the sugar miller's view, what the government will do. But I mean, he was categorical. He said there is zero chance. Actually, the opposite is true, which is that the government will have to subsidize. So we got the opposite angle as well.
Yes.
But I mean, he to the point, he began by saying that there is no impact to the FRP hike because SAP is already higher than
for the UP
for
mills.
UP millers.
Yes, yes.
The vast majority of the listed sugar stocks are all UP based. So I mean, if people in those stocks are listening, I mean, I think that's a pretty instructive sentence. There is no impact of this FRP hike.
And just, Prashant, just to sum it up very quickly, the other 3 things that he said, one about the minimum support price being increased, export being made mandatory of 18 to 20%, and of course the releases being taken back. I think if government does move into these measures as well, for the rest of the mills also, this would actually be a positive. Yeah, but there are a lot of ifs there.
Okay, all right, Manisha. Thanks very much for that. Sugar companies not seeing any sort of respite, down around 3% for Balrampur Chini. Take a break now, but up next, we await numbers from RBL Bank, Bajaj Finance and Kotak Mahindra Bank.